It is another interesting edition of the Economy and Politics show where we bring you key economic developments as they affect the households. This edition will discuss 6 fast-growing sectors that will drive Nigeria's economy in 2022. And my guest is AbdulQudus Isiaka, an economy and market analyst with Proshare. Nice to have you, AbdulQudus.
Thank you for having me.
Yes, thanks. Recently, Proshare, Nigeria's leading financial information hub, published the report 2022 in the Headlamp, Opportunities and Threats in Nigeria's pre-election year. It is on this basis that we would like to have this conversation, discuss around the key issues that the report highlighted as it concerns the economy. But before we begin this discuss, let's give you some key stories from last week. The Consumer Price Index, which measures inflation, increased to 15.6% in January 2022. This is 0.87 percentage points lower than the rates recorded in January 2021. Also last week, President Muhammadu Buhari presented to the National Assembly the supplementary budget that will cover the expenditure for petroleum subsidy payments in 2022. The cost is 2.557 trillion naira. The Senate President, Dr. Ahmed Alawan, presented this to the National Assembly and is expected that it will be approved in due time. We go on a break, and when we return, we'll continue with this interesting conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back. If you are joining us, it is the Economy and Politics show, and we are discussing the 6 fast-growing sectors that will drive Nigeria's economy in 2022. My guest is AbdulQudus Isiaka, an economy and market analyst with Proshare. This is taken from the report recently published by Nigeria's leading financial information hub, Proshare. Nice once again, Kudus, and we just want to look at this report and the whole conversations around the economy. But first, tell us about your projections. Proshare's projection for Nigeria's economy in 2022, the growth level is 2.6%. Just give us further insight into this and the 6 fast-growing sectors that will drive the economy.
Well, thank you for having me once again. Yes, as you rightly mentioned, we did project a 2.6% real GDP growth rate for the year 2022. And of course, that's premised on a number of factors. Firstly, we feel that the low base effect, which played a key role last year, is going to ease off this year. But we imagine that government spending is still going to be very, very key this year. And of course, for that reason, we feel that we should still see growth around 2.6%. I mean, that's the overwhelming likelihood.
Yeah.
More other analysts believe that it could be somewhere between 2.5 and 3%, but to be much more modest, we feel that something in the range of 2.6% is likely.
Yeah.
Now, in terms of those specific sectors you talked about, yes, we did identify a number of sectors, 6 sectors to be specific. We looked at the agricultural sector. We also talked about the construction sector, health services sector. We think that the financial services sector will continue its recovery and expansion. We also anticipate that the ICT sector will continue in its rapid expansion and growth. And then finally, we feel that entertainment and hospitality would also record some meaningful growth this year. Now, in terms of the drivers, we think that the agricultural sector would be supported by the large government spending in that sector. We also feel that in 2022, the SEC rules, the new SEC rules, particularly pertaining to agribusiness, it will be a key determinant. It will be a major factor. It will play a major role in the outcomes for that sector. Yeah. We also feel that the large investment in terms of real networks is going to be crucial.
addressing the logistics.
Yeah, we would see logistical issues that have perennially been a
Yes.
problem ease off this year. And then, of course, we think that insecurity would improve. The situation with security, as the case may be, would improve because, you know, as we head towards the polls, the government is going to do all it can to ensure that insecurity isn't used against it at the election. So that's our outlook. We think it will grow. That sector, the agricultural sector, will grow by between 2.2 and 2.6%. It did grow by about 1.57% last year. So we're quite optimistic about the agricultural sector. Now, in terms of the construction sector, the major factors that will be driving that is the fact that, you know, the government plans capital expenditure of about 5.96 trillion by the budget as passed. 2022 budget as passed. You know, so that is large, at least in relative terms. Yes, although in the Nigerian scenario, we know that our infrastructure gap requires it requires investment of around 15 trillion annually, and you know, yet we would say that 5.96 trillion would rub off on that particular sector and possibly the entire economy. Also, you know, we have our eyes on Infraco. We think that yes, the 15 trillion infrastructure company, when it comes on board, we expect it to become fully operational in 2022. And we expect that mobilization of capital and investable funds to that sector is going to play a key role as well. There are concerns about what subsidy retention could have on capital spending.
Just like we just read in the caption from last week, supplementary budgets.
Exactly. So the decision to retain subsidy, we fear, may constrain the ability of the government to be able to prosecute some of these capital projects. But all in all, we feel that there are still prospects in that particular sector. We feel it would grow by about 3% this year. Now, moving on to the health services sector, we feel the health services sector would leverage on, you know, the lessons we learned from 2019, 2020 regarding COVID-19. You know, we believe that both public and private sector have realized the enormous opportunities, investment opportunities in that particular sector. And recovering from the pandemic, we feel that both economic agents would take positions in that particular sector.
I even expect more investment in health tech and research, which is a leveler which Nigeria can leverage on.
Precisely. So we imagine that there is going to be a lot of investment in that sector and then growth consequently. We expect that that particular sector will grow by about 3.07% this year. Now, moving on to the financial services sector, we feel that it would grow by about 6.6%. It's going to be supported by the digitization steps and efforts of many banks, and their drive. A lot of them have been doing a lot of investments in there. So they even have their own fintech foundries. Exactly. So we're seeing a lot of fintech foundries and the like. So that's going to play a key role this year and going forward, as a matter of fact. Then as for the ICT sector,
big sector,
the major sector, it's going to grow by, we expect it to grow by about 7%. A massive growth, and it actually has been posting, you know,
I think the major driver always been like a big driver of the economy in terms of GDP.
Yeah, exactly. Has supported the services sector, which itself has contributed about 50% on the average to the country's GDP. So we expect the ICT subsector to continue to perform credibly well, and will do so too in 2022. Of course, the major drivers we expect for this year would be the introduction of 5G, fifth generation network. We also expect that the licenses, of course, in principle, they have only been issued in principle, but we believe that these licenses, when they eventually get actionable, we expect would you know, unlock a lot of potentials in that sector. In terms of terms of penetration, we know that penetration has reached almost 100%, but we feel that there's still a lot of room for usage. And so we would find, we expect that that sector would record tremendous growth this year.
That's nice.
Finally, we we also identified the entertainment and the health hospitality sector.
They were really hit by the COVID impact.
Exactly. So we would
that's
see,
nice to hear.
Exactly. So we expect greater recovery and perhaps full recovery this year.
Oh, that's a nice one. I mean, hearing that entertainment hospitality, which is also a big employer in the economy too, is going to recover is really nice. And let's look at the budget. The budget 2022, of course, a huge budget of about 17 trillion in terms of terms and items. What the concerns are there around fiscal sustainability and the revenue required to fund it. And you mentioned again about the capital expenditure, and even there's a deficit of about over 4 trillion, which 50% will be used to mobilize to the domestic market. But let's look at the critical issue. If you can provide insight on these issues surrounding the budget and its implementation, because if the fiscal sustainability is addressed and the revenue issues are addressed, it could help a long way.
Yeah, I think to do justice to that question, I think it's necessary for us to understand the 3 levels of very sound public financial management. I think one of the levers is optimal revenue performance. Secondly, we need to talk about efficiency of public spending, and then finally we need to talk about debt management, or if you like, deficit management. So in the first case, in the case of revenue performance, we could take a look at the 2021 figures, and I feel it would give us a fair idea of the fiscal position in Nigeria. In 2021, the 2021 budget was a 13.59 trillion naira budget.
Approximately almost 14 trillion.
Yes, it's in that range, about 13.59 trillion naira budget. And that budget has a deficit of about 5.6 trillion. And that budget also allows for debt service of about 3.3 trillion naira.
Very huge.
Now, if we are to consider the debt sustainability indexes or measures or metrics, take for example the debt service to revenue ratio, we would find that as of November 2021, debt service to revenue ratio was around 76%, and that implies
that's high.
Implies that for every 1 billion naira generated by the government, 760 million was, utilized in service debt.
That's too high.
Both in terms of interest payments and in terms of principal repayment, which
too high for an economy,
which really constrains the ability of the government to undertake capital projects
in critical sectors that can unlock the economy.
Exactly, especially for an economy like Nigeria's economy, which largely operates below its production possibility frontier and aggressively requires capital spending. So it isn't something that is commendable at all. It's deplorable. Now, so we, however, find that the Ministry of Finance, Budget and National Planning have all along defended, the debt position.
And even the debt management office has also tried to explain a lot around that.
Of course. So, the idea of using debt to GDP ratio is quite problematic because trying to draw parallels with countries like the US, where really their debt to GDP ratio is beyond 100. They have a debt stock that is in the range of 30 trillion and their GDP is around 23 trillion. So you can imagine that their debt to GDP ratio is much more than 100%. Far exceeds what we have in Nigeria, something between 27 and 35%. But the point is that where tax revenue to GDP ratio is as low as you have it in Nigeria, something in the range of 7%, then it's not credible and it's not plausible to try to draw a parallel with the US economy, because the government isn't able to recoup whatever funds. It's not able to settle its debt obligations by tax revenue because tax administration is problematic. So it's like a vicious circle. And so the government must avoid that and mustn't find itself in such a vicious circle. Now, so if we were to go to the revenue, section, so we have talked about the debt service revenue, debt sustainability issues. Let's talk about a bit about the revenue issues. Now, revenue performance as of May 2021 was about 67%. Quite low. 67% of the prorated target.
Okay, prorated target.
Now, as of the end of August, revenue performance was about 73%. It did improve, but again, we're able to tie that improvement to the rally in crude oil prices, which we saw in the second half of the year. And then it raises the question of whether we can make a distinction between debt sustainability or whether we have a revenue problem. Because if your debts are sustainable, so long as you are able to generate sustainable revenue, then there is a distinction in the Nigerian case between debt sustainability and revenue issues. So I feel that the government needs to adopt and employ much more innovative techniques in addressing not just debt sustainability issues, but also revenue drags, or what you call fiscal shocks. Again, in the last leg, which has to do with public spending efficiency, we find that much more of our budget is allocated to inefficient ends. So take, for example, Nigeria allocates 27% of its budget to support the public sector. And that's massive.
A huge public sector of over 3 million
federal
civil servants.
It's massive, but it's not commendable. So in Kenya, 17% is what is spent on the public sector. In US, just about 3 to 4% is what is spent on the public sector. The rest is done by
the private sector.
Exactly. So that tells you by how much we are shortchanging ourselves in terms of, the
efficiency,
poor allocation of resources. So we need to do some reallocation. We need to do some reallocation. So my thoughts are that, and my recommendations to the authorities are that, firstly, in terms of public efficiency spending, we need something like a congressional budget office where the effect of spending can already be known aforetime. So we are looking at the effects of this year's spending, for example, these budgetary allocations, on not just this year, outcomes this year, but also on subsequent years. It should raise the efficiency of public spending. In terms of revenue, the government needs to consider, as I mentioned earlier, innovative approaches to shoring up its revenue positions. It needs to consider privatization. It needs to also consider asset securitization and financialization. And by that, I mean, that medium through which the government can unlock resources from, hitherto idle assets. So these are alternatives the government can explore. Then in terms of debt management or deficit management, I think the government needs to look at non-interest bearing loans. It also needs to take advantage of tax credits, which are like accruals. So we're able to construct roads and do much of this capital projects even without earning immediately.
I think the last point you made, non-interest bearing loans and asset securitization, are very, very critical. I think that the fiscal policy authorities will begin to work around it. Last year, we had a conversation with the Minister of Finance, and she talked about the setting up of a Ministry of Finance in Investment Limited. That's a Ministry of Finance Limited, which is going to handle issues around assets. So we'll be watching to see when that takes effect too. Now, let's look at the indicators for 2022, and what are the optics for this year?
Well, I think we've taken GDP already. Our projection is that real GDP growth will come in at about 2.6% this year. In terms of course, we mentioned what the drivers are for GDP. We talked about large government spending. On the downside, as a downside risk, we feel that low base effect is going to have a discounting effect to some extent. But at the same time, we feel that pre-election year spending and some of these targeted credit facilities that we've seen the government undertake would continue to support the economy. Those are major factors that we think will support GDP growth in 2022. Now, in terms of inflation, we feel that in 2022, we feel inflation will remain double digits. It will remain double digits, and that would largely be because of growth in money supply. Again, because of pre-election year spending. So again, because of energy costs, crude oil prices are rising. There's a downside, there's an upside. But for manufacturers who would have to be faced with huge energy costs, so we feel that that would trickle down to the cost of items in the market. So we feel inflation will remain elevated. Of course, on the brighter note, we feel food inflation may continue to moderate. It did moderate in the most recent data. Yeah. In the most recent data, it did moderate by about 20 basis points, if I'm not mistaken. Yeah. So, you know, we expect that it will continue to moderate for two major reasons. We feel the level of insecurity that has been a bottleneck all along will ease. And then we feel that issues around logistics will be catered for by the rail line that has been put in place. And I think maybe on as a third reason, we feel that there has been, or there was, a bumper harvest last year. I mean, whether we want to believe it or not, there was a rice pyramid, and we feel that that should trickle down to the market and affect food prices. Okay. So we've talked about GDP, we've talked about inflation. Yeah. In terms of reserves, we think that the allocation, the IMF is likely going to be making another allocation this year, something quite similar to the special drawing rights we saw last year. Yeah. It's in the range of $50 billion US, and by the time Nigeria gets its own allocation towards the end of the year again, we think it should support our external liquidity. We also believe that the Dangote refineries, when it comes on board, will help us save some FX. And however, whether this would affect exchange rate or not depends on what policies the CBN decides to adopt. Of course, it did recently come up with the RT200 FX repatriation.
I call it an ambitious plan.
Yeah, it is ambitious. It is ambitious. Maybe it's a pie in the sky, but $200 billion US, raising the FX reserves to $200 billion in 3 to 5 years is really ambitious. It's commendable, and I think we can work towards it. Now, in terms of capital importation, we feel that going into the election year, pre-election year,
FPIs particularly.
Yes, FPIs would kind of withdraw. We've seen that all along.
The trends already.
Yes, it did fall. Compared to 2019 pre-election year, we've seen a 78% drop in capital importation. We feel that trend will continue this year, particularly because of the pre-election year we are in and the monetary policy normalization we would begin to see from March. Of course, monetary policy normalization based on empirical studies is not going to have the largest effect, but it would, to some extent also play a part.
So we just watch the Fed when they make their hikes and how it will impact.
Exactly.
Okay. All right. Exactly. So in terms of the opportunities and threats for households, businesses, and also government agencies, what are those opportunities? And I like the opportunities.
Yes.
The threats are things we don't want, but it's good to know them so you can plan.
Yes. As it's etched in the title of the report, opportunities and threats in Nigeria's pre-election year, we did highlight a number of opportunities and threats for all major economic agents. For households, we feel that food prices will moderate for reasons I already mentioned. We, however, feel that manufactured food and other utilities the prices of such items would rise, of course, because of energy costs and a number of other factors I already mentioned. Again, access to FX,
foreign exchange,
despite the accretion in the reserves, may still be an issue and a reason for why we would see manufactured goods, prices of manufactured goods rise. Then in terms of job opportunities for households, we think unemployment will still be high at between 30 and 35%. Youth unemployment will still be between 50 and 55%, also very high. But we feel that individuals with skills, high-end skills, will find opportunities everywhere.
High-end skills. Okay.
We'll find opportunities everywhere. Housing, for households, we feel that, we feel that rents may go up. The consideration that the State House of Assembly is currently having deliberation.
Lagos.
Yes, with Lagos, Lagos specifically for Lagos and its environs, because it would affect the environs as well.
Definitely.
So we feel that landlords would want to cover for the counterparty risk that arises from a short-term contract by raising rates, to just give themselves some cover. So those are outlooks for households. Now for businesses, MSMEs precisely, we think they would have to cope with higher costs, thinning profits. They would have to find innovative ways and adopting innovative strategies in order to cut costs, and one of which we feel would be they would continue to move to operate from their homes. So rather than operate from a business place where they have to incur rent, we feel that they would operate from their homes, and there will be a lot of outsourcing. It's consequent. So a lot of delivery and all of that. So also for MSMEs, one cheerful opportunity is the fact that Twitter is back and it's going to help with marketing and putting these businesses out. These businesses did lose a great deal due to the crackdown on Twitter by the federal government. Now, in terms of the government, we feel the government is going to again have a budget overrun, not least because of the subsidy retention, this decision to retain subsidy, but because again, there is also the pre-election year spending. So we expect that the government is going to retain MPR. The government is going to continue, CBN particularly is going to continue with its targeted credit facilities. The government is not going to introduce any new taxes. We need to allay our fears regarding that. They are approaching the election year and they don't want to stir the honestness. So that's our outlook for the government, for MSMEs, for households. Now, for savers and lenders, we feel that real rate of returns is still going to be negative because double digits inflation. We also feel that effective CR is still going to be high, so the rate of return or return on equity for investments in banks particularly will still be capped. And then finally, there would be mergers. There will be merger, and that presents investment opportunities. So that's our outlook in summary.
Beautiful. I mean, this is really nice to know now that the 6 fast-growing sectors that will drive the economy, the issues around their sustainability and what we need to know around revenue, and also the fact that there are opportunities and then there are threats that have been highlighted. And thanks for this insight you provided, AbdulQudus Isiaka. I've learned a lot today.
It's an absolute
and
pleasure.
it's always nice to have you. Subsequently, we'll discuss our economic issues. It's a pre-election year, so we need to discuss more around the economy. Thank you once again, AbdulQudus Isiaka, Economy and Market Analyst with Proshare. Thank you.
Thank you for having me.
That will be all for this edition of the Economy and Politics Show. If you have questions, comments, or suggestions on the 6 fast-growing sectors that will drive Nigeria's economy in 2022, please send them to otobasi.abasekong@proshareng.com. We'll be glad to receive them and respond to you appropriately. Now, Proshare has published this report I told you about, 2022 in Headlamp, Opportunities and Threats for Nigerians Pre-Election Year. To read this report, log on to www.proshareng.com. I tell you, this report is very incisive, comprehensive, and a lot to learn from as you plan for the year. You can also engage us via social media platforms displayed on the screen. Thank you for being part of this show. Have a nice day.